three vital things to take into account when you are purchasing a property. 1, your lender. 2, taxes, and 3, insurance. Now, how do all of these things play a part in your property purchase? Well, let's start with the lender. They're the ones that are going to be helping you provide the money for closing. So first, you need to find a reputable lender. If you don't know of one, then that's where I come in as your realtor to help you choose somebody who is trustworthy and can get you to the closing table. As part of that lending process, you want to make sure that you are communicating what you need from them. So, is down payment assistance important to you? Are you looking at different loan types like a rural development loan, Federal Housing Administration, or FHA loan, or even a conventional mortgage? Are any of these things, or maybe it's a land or construction loan? Those are all different types of loans. Maybe it's a veteran's loan because you're a veteran. Thank you for your service. Now, we need to talk about your cash priorities. So are you looking to have more or less cash when it comes to closing? Some people want to use additional closing costs to buy down the rate because that's more important to them. So establishing the priorities with your lender and your realtor are extremely important to make sure that you get to the closing table with all your goals fully intact. The other thing that we want to make sure that we're disclosing to the lender is all of your debt. So if you have financed a dog, a car, you have student loan repayments, anything like that, all of those things are going to come under your debt to income ratio. And those are things that the lender needs to be aware of in order to advise you wisely and make sure that you qualify for the loan so that when you place your contract in for your property, that you aren't being denied at the very end and then falling through on your contract. Now, taxes are the next important thing to make sure that you're understanding. A lot of people don't know that the state of Arkansas has a differing tax, a real estate tax for investment properties versus a personal home. There's actually a tax break for people who own their own home. You save, most recent numbers were $600 per year on your property tax if you own your own home. Now, if you have an investment property, you do not get that $600 homestead tax exemption, which you must apply for, by the way, but you also don't get the discount in the increase of your property taxes year over year. So for your personal property, you actually only have a 5% increase year over year, whereas in an investment property, you can have 10% increase year over year in your property taxes. And then lastly, another piece that we must talk about is your insurance. Whenever you're going to get your insurance for your property, you want to make sure that you are asking some specific questions regarding your insurance. 1, what type of roof replacement do I have? Is it a depreciated value of the roof or is it a full replacement value? The second thing to note is it actually the same deductible? Recently, we've been seeing that insurance prices have gone up, and because of the increase in roof replacements, they are changing the roof deductible to be 1 to 2% of the value of the home that is being insured. So very important to make sure that you're asking those specific questions. Secondly, I always recommend talking to an insurance broker. An insurance broker is someone who has multiple different insurance groups that they are a part of, and they can make sure that they're looking at all of these different groups to get you the absolute best rate and the most coverage. And then lastly, I always recommend that you're shopping every 1 to 2 years on your insurance policy. That is the best way to make sure that you are saving yourself money and ready to invest in more property, stocks, or whatever else you want to do. Maybe it's a vacation with your family. Like and follow for more.